Hello everyone, how are you? Hope you all doing well. Today I will present material of banking law. This presentation is an assignment for the banking law course. Before that, let me introduce. My name is Indi Angelica Rahmania Yusra with NIM 211011150. Welcome to watch. Okay. This presentation is titled BI's rule lender of the last resort is associated with the rule of OJK and LPS in the financial stability law. Rule of Bank Indonesia in financial stability. As the monetary, banking and payment system authority, Bank Indonesia's main task is not only to maintain monetary stability, but also financial system stability, banking and payment system. The success of Bank Indonesia in maintaining monetary stability without being followed by financial system stability will not mean much in supporting sustainable economic growth. Monetary stability and financial stability are like two sides of a coin that cannot be separated. Monetary policy has a significant impact on financial stability and vice versa. Financial stability is the pillar underlying the effectiveness of monetary policy. The financial system is one of the transmission channels of monetary policy. So, if there is financial system instability, the transmission of monetary policy cannot run normally. Conversely, monetary instability will fundamentally affect the stability of the financial system due to the ineffective functioning of the financial system. This is the background why financial system stability is also still the duty and responsibility of Bank Indonesia. The first is research and monitoring. 2. Financial system safety net. 3. Regulate and maintain a smooth payment system. 4. Maintain monetary stability. 5. Creating sound performance of financial, particularly in the bank sector. First, through its function in research and monitoring, Bank Indonesia can access information that is considered to threaten financial stability. Through macroprudential monitoring, Bank Indonesia can monitor the vulnerability of the financial sector and detect potential shocks that have an impact on financial system stability. Through research, Bank Indonesia can develop macroprudential instrument and indicator to detect financial sector vulnerabilities. The result of the research and monitoring will then become recommendation for the relevant authorities in taking appropriate measures to reduce disturbance in the financial sector. Second, Bank Indonesia has a function as a financial system safety net through the central bank's function as a lender of the last resort, or LOLR. The LOLR function is the traditional role of Bank Indonesia as the central bank in managing crises that avoid financial system instability. The LOLR function includes liquidity provision under normal and crisis conditions. The function is only given to banks that face liquidity problems and have the potential to trigger a systemic crisis. Under normal conditions, the LOLR function can be applied to banks that experience temporary liquidity difficulties but still have the ability to repay. In carrying out its function as LOLR, Bank Indonesia must avoid moral hazard. Therefore, systemic risk consideration and strict requirement must be applied in the provision of liquidity. Third, Bank Indonesia is the authority to regulate and maintain a smooth payment system. If there is a failure to settle on one of the participants in the payment system, there will be potential risks that are quiet service and disrupt the smooth running of the payment system. Such failure can lead to contagion risk, causing systemic disruption. Bank Indonesia developed mechanisms and arrangements to reduce risk in the payment system which tend to increase. Among others, by implementing a real-time payment system or known as the RTGS, real-time gross settlement system which can further improve the security and speed of the payment system. As the authority in the payment system, Bank Indonesia has the information and expertise to identify potential risks in the payment system. Bank Indonesia has the data to maintain monetary stability, among others, the interest rate instrument in open market operations. Bank Indonesia is required to be able to set monetary policy in an appropriate and balanced manner. This is because disruption of monetary stability has a direct impact on various aspects of the economy. Monetary policy through the application of interest rates there are too tight will tend to kill economic activity and vice versa. Therefore, to create monetary stability, Bank Indonesia has implemented a policy called the Inflation Targeting Framework. Fifth, Bank Indonesia has a vital role in creating the performance of healthy financial institutions, especially banks. The creation of such performance of bank institutions is done through supervisory and regulatory mechanisms. As in other countries, the banking sector has a dominant share in the financial system. Therefore, failures in this sector can lead to financial instability and disrupt the economy. To prevent such failures, an effective banking policy and supervisory system must be enforced. In addition, market discipline through supervisory and policymaking authority as well as law enforcement must be implemented. Available evidence show the countries that apply market discipline have strong financial system stability. Meanwhile, law enforcement efforts are intended to protect bank and stakeholder and sometimes encourage confidence in the financial system to create stability in the banking sector in a sustainable manner. Bank Indonesia has developed the Indonesian banking architecture and Basel II implementation plan. That is the role of Indonesian banks in general. Furthermore, Bank Indonesia's role as lender of the last resort is to provide liquidity to banks that are experiencing liquidity difficulties in running their operation. In this regard, Bank Indonesia serves as a safeguard for the national financial system and prevent systemic failures that could negatively impact the economy as a whole. Meanwhile, the Financial Service Authority (OJK) and the Deposit Insurance Corporation (LPS) are institutions that also play a role in maintaining financial stability. OJK is responsible for regulating and supervising the financial service sector, includes bank, insurance companies, and capital markets. Meanwhile, LPS is responsible for guaranteeing customer deposit in the banking sector. The three institutions have interrelated rules in maintaining financial stability. The rules of Bank Indonesia, OJK, and LPS in maintaining financial stability are regulated in Law Number 9, 2016 on financial stability. This law contains provisions on the duties and functions and each institution in maintaining financial stability. including in situation of financial crisis. In a crisis situation, Bank Indonesia can take special measures to maintain financial stability, such as providing emergency loans to banks experiencing liquidity difficulties. Meanwhile, OJK and LPS can take steps to ensure the banks continue to operate properly and meet the requirement to have been set. Okay, everyone. Maybe only all of me. If there are mistakes, please forgive me. Thanks all. See you again.